70% of China's savings are actually in the property market. So there is a huge wealth effect on consumer sentiment and on consumer spending. So I think right now, in the onshore market, people are expecting the property prices are actually not going to double in the next 5 years. And I think a lot of people are adopting a wait and see attitude, also because the government just approved a property tax launch. We don't have the details yet. We think it will be a soft launch, but a lot of people are waiting for this policy to come out first before they will go ahead to buy a property. At the same time, we do see the resurgence of COVID across many important manufacturing hubs and port cities. And of course, if the government implements more severe lockdowns, it will be quite negative for the consumer sentiment and consumer consumption going into this fourth quarter.
Zerlina, good morning. Thank you for joining in this conversation. So essentially, the responsibility or the buck would fall with exports, you think, in terms of channelizing supply chains to meet foreign demand if domestic consumption stays sluggish?
Yes, I think export will still continue to be a very important growth driver for the Chinese economy in 2022. And our base case scenario is still China will see quite strong exports. And on the import side, because of these strict lockdown and broader border control, we don't expect there will be a lot of tourism related outflow. On the other side, I think in terms of capital inflow, it has been quite strong lately. There are still a lot of foreign money coming to the China market to purchase, especially since some of the central and local government bonds. So on that front, I think it could be one of an important driver for the economy. The other driver we could think of as infrastructure investment, not your traditional, a bit of wasteful infrastructure investment, but more like in the new areas such as your water utility, your green transportation, decarbonization related investment. And I think the policymakers have made it very clear that they will front load all these infrastructure investments. That said, we don't think we are going to see the scale to be comparable as what we have seen after the global financial crisis. So it's still quite a measured fiscal easing measures adopted by the central government.